Well, they did it. They filled the gap that started the sell-off over 5 months ago. Will this act as resistance? This is technical analysis of the stock market's update and forecast for Thursday, August 6, 2020. Hello traders, I'm Richard Graham. Thanks for joining me. We're going to start by taking a look at the S&P 500 and look at today's action. This candle finally did it. We filled that gap that started the sell-off back here on February 21st through 24th, that weekend when we had that Monday big drop. That gap was finally filled today, and a lot of traders are wondering, is this going to act as resistance? You can see the area that I'm talking about here, and here we are today. If we zoom into let's zoom into the hourly chart to see what happened today. Here we gapped up on the morning, and we stayed in this trading range all day, hit a high of about 33.30 on the S&P index. And this is where we filled that old gap from about 5.5 months ago. The thing that's interesting, now if we zoom out to the daily chart again, we see that we've had this recovery since March 23rd. So that's been going on April, May, June, July, almost 5 months now. You know, the recovery that happened in 1929 after the big sell-off in the fall of 29, they had a recovery that lasted about 5.5 months, and then big leg down after that. Now, the recovery wasn't quite as sharp as the recovery we've had. We've recovered almost 100% of the losses here on the SPX. Of course, we were talking about the Dow back then, and the Dow we can see is not doing quite as well as the S&P 500 on the recovery. We've recovered quite a bit. We're not quite up to those highs that we had in February. You know, it's the Qs, it's the Nasdaq that's really been doing the best. Here's where we were sitting at the highs in February, and we've broken through this long-term trend line that I've drawn in red here that we hit several times in 2018, and then we hit it again before the big sell-off in February, and now we're still sitting above it. Now, the thing is, over the last few days or so, the S&P 500 actually has been outperforming the Nasdaq for the first time in a long time. Now, so a lot of people are looking for a possible big leg down like we saw in 1930 after the big sell-off in 29. Well, we'll just have to wait and see. So far, we haven't seen any lower lows or lower highs on the indexes themselves. They're still in a bull trend, and the trend is still your friend until it's not. Now, the trend did kind of slow down here. You see that the upward momentum of the trend here in this red channel here, and we kind of broke down below that red channel. Now we're in this new yellow channel, which actually is kind of going a little more sideways, but still the trend is up. Now, but look at that. If we zoom in, we see that we broke through it. Let's go up back to the 30-minute chart, and this is where we're sitting today. We're sitting right here at the top of that gap that we finally filled from over 5 months ago. So will this act as resistance? It's quite possible, but until then, it's probably not a good idea to sell this market until you start seeing lower highs and lower lows on the overall structure of the price. So where do we have support in this market? Well, we have a lot of support right here at this level. This is the top of the island reversal that we sold off from back in right around June 9th or so. And so that's going to act as some serious support right around the 32.35 level. Before that, we have support right here at around the 32.75, 32.80 level. We do have this gap, and a lot of times gaps do get filled on the S&P 500. If that's the case, though, we do have a big gap here that takes us all the way back to May 15th that would fill right around 28.80 or so. So could we be ripe for a sell-off? Sure, it's possible. We hit that level of resistance. Usually when you fill a gap, there is some kind of pushback. But that might not take us back very far. It might be a good buying opportunity once you get down to these levels, 32.80, like I said. The VIX is still trending down. If we zoom out, we see that we're still at these levels that we were right when the sell-off began, which is really interesting. So we filled the gap on the S&P 500, but on the VIX, which is inverse in price to the S&P 500, the fear index, we see that we still haven't filled this gap So there is room to the downside for the VIX. The term structure is still in contango, and it's pretty steep at 11.26 between the first and the second futures on the VIX. And when the VIX is in contango, that is normally a bullish indicator for the stock market. Now, what drives the stock market? It's the big cap-weighted stocks like Apple, and look at that. Apple's really been on a tear. Here on the daily chart, we see that we did break out of this upward sloping trend line to the downside, but look, we're back into it, and then we broke out to the upside. So really bullish on Apple. Amazon, still looking like a bullish chart. We broke out of this pennant to the upside, and now it looks like we could have a measured move equal to this move here that starts about right here. So we could come up to around the 3,500 level on Amazon. And I would say the same thing could be in store for Microsoft. We had quite a move up, quite a correction, and look at this big gap up a couple of days ago. This could run from here as long as we could break out of this resistance that we're seeing here at 216.70 or so. Google is another big cap-weighted stock. There was all this resistance. We broke through it, and now we're sitting right on top of that, so I would look for that to act as support. If we break down from here, we could have quite a sell-off, maybe down to 1350 or so. Facebook, another big cap-weighted stock. Same thing, very bullish. Had a big gap up here on July 31st. Now we're consolidating, but we're still sitting above what was resistance, creating some support here and above this upward sloping trend line as well. Tesla's another one that's not a major cap weighted stock, but a lot of people are trading it now because it seems to be on fire, and it's inside of this pennant, this bull flag pattern. If we break to the upside, I like to look for an opportunity to get back in at this level right around 1,500 or so. TLT is long-term government bonds, and we're also on an uptrend here, looking to hit some possible resistance right here around this 172 level or so. In the meantime, we're still in this upward sloping channel, and with all of the government printing that's going on around the world, that can only be bullish for bonds. If we do get a sell-off in the stock market, we look for bonds to go higher as well. GLD is the ETF for gold, and gold has been on quite a tear lately. Look at this. I had pointed out that we were consolidating in this area in early July, and boy, when it finally broke out here on the 21st of July, it's been on quite a run. Today, we gapped up again, so this is not a time when I want to be chasing the price. I'm not selling at this point, but looking for profits and an opportunity to get back in, maybe when it hits some major support right around this level at about 182. If we look at the gold futures, same picture. We had this consolidation in early July, and then we broke out to the upside, hitting as high as about 2055. So I think we're going to find some more support right around the 2,000 level, and then we have all of this consolidation. We might find some more support right around 1960. So if you missed the boat on gold, those would be probably some opportunities to get in. Right now, you'd probably be chasing price. Silver, same thing. Big run-up, consolidation, big run-up again, gapped up again today, up 3% above the upward sloping trend lines. And you see that we have silver hitting some resistance that we had in the past here in 2012 and in 2013. This has acted resistance before we had the big sell-off, and kind of similar to what we're seeing in the S&P 500 right now. But this could act as resistance. Might be a good time to take profits if you're already long silver. Looks like we hit a high of about $25 on SLV today. And it's been on, we haven't had a bull market in silver like this in quite a while. The next stop for silver could be right up here at this resistance I see right around the $34, $35 level. Now here's Bitcoin on the weekly chart. We see that we finally broke out of this trend line here, so it's looking bullish. Although we are sitting at some resistance that we had in 2019, if we can get above this resistance and then have a pullback, that might be a good opportunity to go long Bitcoin, because we don't have any resistance until at least 16,120 or as high as 20,000. So I want to look for a couple of things that are coming up. Today we have initial jobless claims coming in at 8:30 Eastern time. That could create some fireworks, and so could the non-farm payrolls and the unemployment rate, which were both coming in on Friday at 8:30 Eastern Time as well. All right, guys, so the S&P 500 is in an uptrend. We are hitting some resistance. We have more resistance at these highs in February of 3,400. Either one of these could act as at least a temporary turnaround. If you like these kind of videos, make sure you hit the like button for me. I'd really appreciate it. Consider subscribing and hit the notifications bell. All right, guys, have fun today. We'll see you next time.